It is Sunday, March 8th, 2026. 4 hours from now, Asia opens. Not tomorrow, not next week, 4 hours. And there is one number I need you to hold in your head for the next 20 minutes before that session starts. Not 85.29s, the price that printed on your screen when COMEX closed Friday. That number is not what I want you to hold. The number I want you to hold is this, 19. 19 trading days. That is all that separates today from March 27th, the last trading day of the March COMEX silver contract. The contract that currently has 429 million ounces of paper claims sitting against 86 million ounces of registered physical metal in the vault. The contract where, on first notice day alone, 10,526 contracts representing 52.63 million ounces of silver stood for physical delivery, more than 60% of the entire registered inventory demanded in a single day, 19 trading days. In 4 hours from now, the buyers who are going to determine what happens inside those 19 days get their first chance to trade. Here's what I'm going to show you in the next 20 minutes. First, exactly why Friday's 85.29 is not a real price, what a gamma pin is, how it works, and why the option structure that manufactured that close expires with the weekend. Second, the vault math that does not care about anyone's feelings. Registered inventory, drain rate, coverage ratio, all public numbers, all documented. Third, what Shanghai already knows that COMEX cannot price on a weekend. Fourth, the 3 honest scenarios for tonight's open and what each one means for the next 19 days. And fifth, your exact watch list. All free, all public, so you can read what actually happens in real time instead of waiting for someone to tell you. No hype, no paid group, no hidden course. Every number I give you is in the public domain. Links are in the description. Section 1. Why 85.29 is not a real price. The gamma pin that manufactured Friday's close. Before I show you the vault math and the Asia setup, I need to explain something about Friday's close that almost nobody in the silver community is talking about. Because if you do not understand what happened Friday afternoon, you will misread what is about to happen tonight. On monthly options expiration Fridays, gamma hedging activity concentrates in the final hours. If the market sits near a strike with massive open interest, dealers need to buy dips and sell rallies when they are short gamma, creating a pinning effect. Many traders have observed that the week leading into monthly expiration tends to exhibit lower realized volatility, as dealers' hedging activity suppresses price movement. After expiration with the pin removed, markets may see a volatility expansion. Sprott money. That is the technical description of exactly what happened Friday. Silver options expire on a schedule. At key round numbers, $85, $87.50, $90, there were stacked call and put positions. The dealers who wrote those options had one job heading into Friday's close: suppress volatility, buy every dip, sell every rally, keep price gravitating toward the strike where their net payout is minimized. That is not conspiracy. That is documented market mechanics. It is called a gamma pin, and you can read about it in any options textbook. So here's what you actually had on Friday. Underneath the surface, 10,526 contracts representing 52.63 million ounces standing for March delivery against 86.13 million ounces registered inventory. February 2026 had just delivered 5,036 contracts, the highest February delivery volume in modern COMEX history. J.P. Morgan. The physical stress was at maximum. The vault drain was accelerating. Banks were standing for metal. The March deadline was 19 trading days away. On the surface, 85.29. Clean close, looks calm, looks like the week's chaos had been digested. Here's the specific thing you need to understand right now. The option structure that pinned Friday's close expired with the weekend. It is gone. The physical stress that was building underneath it did not expire. It carried forward. And tonight, when Asia opens, it will be trading a market without the gamma pin. For the first time since last Sunday, price discovery is unconstrained. Section 2. The vault math. The number that cannot be argued with. Let me put the specific numbers on the table. No drama, pure arithmetic. As of the most recent data, March 2026 open interest, 429 million ounces. COMEX registered silver inventory, approximately 86 million ounces. February 2026 delivery rate, 98%. 1872 million ounces delivered from 19.11 million ounces of open interest. Inventory drainage rate, 785,000 ounces per day. Metals, daily. Let me make that drainage rate concrete, 785,000 ounces per day. At that rate, over 19 trading days, the time between today and March 27th, the vault loses another 14.9 million ounces. From the current 86 million, that leaves approximately 71 million ounces of registered inventory on the last trading day of the contract, assuming the drain rate holds and zero new metal enters the registered pool, against 429 million ounces of paper claims. COMEX registered silver, the portion available for delivery, has dropped over 70% from its 2021 highs. This vault drain is one of the most important developments in the silver market. Fortune now, here is the distinction that matters most and that most analysis gets wrong. Total silver in COMEX vaults, registered plus eligible, still looks large. But eligible silver is not on tap. It is metal that meets the standards but has not been volunteered into the delivery pool. You cannot force an eligible bar into registered. The owner chooses. Fortune COMEX registered inventory fell from 240 million ounces in April 2020 to 86.13 million ounces in February 2026, a 64.1% decline. Shanghai inventory fell from 559 tons in November 2025 to 318.5 tons in February 2026, a 43% decline. Combined COMEX and Shanghai drawdown over 6 years represents approximately 161 million ounces, 19.6% of the 820 million ounce cumulative supply deficit, J.P. Morgan. The remaining 80% of the deficit was absorbed by irreversible industrial consumption, solar panels, electronics, EVs, silver that went into products and cannot come back. It is not sitting in someone's vault waiting to be registered at COMEX. It is in a circuit board or a solar cell somewhere. It has gone from the available supply pool permanently. That is the vault you are drawing from over the next 19 days. A vault at 64% below its 2020 level, draining at 785,000 ounces daily, with 429 million ounces of paper claims outstanding and a last trading day 19 days away. Section 3. What Shanghai already knows. The premium that COMEX cannot see on a weekend. While COMEX was pinning Friday's close-through options mechanics, Shanghai was doing something different. Shanghai was pricing physical silver based on what physical silver actually costs to acquire right now. The Shanghai Futures Exchange silver contract trades at premiums above COMEX futures, reflecting China's refined silver export restrictions and accelerating domestic industrial consumption. When arbitrage mechanisms fail to equalize regional pricing, it signals breakdown in global physical distribution networks. Lease rate indicators show backwardation in forward curves, where near-term silver commands higher prices than future delivery dates, a structure that typically emerges during acute physical shortages. Fortune. Here is the specific mechanism for tonight. Shanghai's night session opens at 8 p.m. Beijing time, which is early Sunday morning Eastern time. The buyers sitting at those terminals tonight have had 48 hours with no COMEX trading to absorb this week's news. The Iran war entering its second week, Hormuz still effectively closed, Trump's unconditional surrender post, Qatar declaring force majeure on gas contracts, NFP minus 92,000 confirming the Fed is frozen, and the COMEX vault drain continuing through every day. COMEX was open this week. China's export controls, de-dollarization-driven central bank buying, and demand lock-in from nuclear energy revival represent four structural forces driving a wholesale repricing of silver. Tech giants like Samsung and Tesla are securing physical silver through direct deals, bypassing exchanges entirely, signaling a shift to vertical integration. Exchange rates UK. Samsung did not go to COMEX for paper silver. Samsung finalized a mining prepayment deal providing a $7 million prepay offtake facility to Canada's Silver Storm Mining to restart the La Paria silver mine in Mexico, obtaining the exclusive right to purchase 100% of the mine's silver output for the next 2 years. Exchange rates UK. That is industrial procurement bypassing the exchange entirely. That silver will never appear in COMEX registered inventory. It is locked up for 2 years before it even gets mined. The Chinese institutional buyers opening their terminals tonight know the Samsung deal. They know the COMEX drain rate. They know the March 27 deadline. They know the vault number. And the first price they set tonight will be the first unconstrained price discovery event in the global silver market since Friday afternoon, without the gamma pin, without the option structure, without the suppression mechanism that manufactured 8529s. Section 4. The skeptics. Why you should take the bear case seriously. I always give you both sides. The bear case on tonight's open is serious and you need to hold it. March is a major delivery month, the most active silver contract of the year. It includes hedge funds, banks, and traders who use futures for hedging and speculation, not necessarily for physical delivery. The raw open interest number makes the situation look more extreme than the actual delivery demand will be. Vietnam. That is a legitimate methodological point. 429 million ounces of open interest does not mean 429 million ounces will stand for delivery. It never has. Even in this cycle's stressed months, the actual delivery demand has been a fraction of open interest, albeit a historically high fraction. If March reverts toward even 20 to 30% delivery demand instead of February's 98%, the math looks very different. 20% of 429 million ounces is 85.8 million ounces, approximately equal to current registered inventory. Stressful, but manageable. Not a breakdown. COMEX has many tools, margin hikes, rule changes, exchange for physicals, eligible reclassification, that it has used throughout this cycle to manage delivery stress without letting the system formally break. Vietnam 6, margin hikes since November, cash incentives for non-delivery, EFP arrangements shifting delivery obligations off exchange. This toolkit has worked every time it has been deployed so far. There is no documented reason it cannot work again. The second bear argument for tonight specifically, ceasefire risk. The single most powerful event that reverses a Shanghai-driven gap-up is a Trump announcement of diplomatic progress before Monday's COMEX open. If any credible signal emerges from Oman, Qatar, or UN framework talks this weekend, the war premium in both COMEX and Shanghai evaporates faster than it built. The third bear argument, silver can still move into COMEX vaults or be reclassified from eligible to registered. JM Bullion. The eligible pool currently sits at over 300 million ounces total. If prices rise enough to incentivize eligible owners to convert their metal to registered, voluntarily, on their own schedule, the deliverable pool expands. It has happened before in stressed markets. It could happen in the next 19 days. Hold the bear case in one hand, hold the vault data in the other. Let tonight's actual price action tell you which side is currently winning. Section 5. 3 scenarios, honest probabilities. Here is the full scenario set for tonight and what each one means for the next 19 days. Scenario 1. The controlled grind, most likely. Shanghai opens $2 to $4 above Friday's COMEX close. SGE premium reflects the structural VAT component plus modest genuine demand signal. COMEX electronic session opens slightly higher at 6 p.m. Eastern. No CME margin hike announced Sunday evening. Silver grinds into the $87 to $92 range over the next week as delivery demand continues absorbing registered inventory. Physical silver premiums over COMEX futures remain elevated at $4 to $6 per ounce for investment-grade products, compared to historical averages of $1 to $2 per ounce. Fortune. The system wobbles, but does not snap. Each quiet day is one more turn of the ratchet on a vault that is already under maximum historical stress. Scenario 2. The gap up. Possible. Shanghai opens significantly above Friday's COMEX close. SGE premium widens beyond the structural Viet baseline into genuine physical demand territory. COMEX electronic session gaps up $4 to $8 in the first 30 minutes. No margin hike announced Sunday evening. CME does not intervene before the open. Silver pushes toward the $90 to $92 resistance level that the February 25th trading halt stopped it from closing above. Emergency margin hike procedures follow within 24 hours as the exchange responds to the move. Exactly the pattern from prior surges this cycle. Metals edge violent intraday swings in both directions as the system finds a new equilibrium. Scenario 3. The head fake. Also possible. A diplomatic breakthrough, ceasefire signal, Oman mediation, UN framework, hits over the weekend before Asia opens. War premium evaporates from both markets simultaneously. Shanghai opens at or below Friday's COMEX close. COMEX electronic session opens flat or slightly lower. Social media spends the night posting, "Was that it?" commentary. The vault keeps draining. The deadline keeps approaching. But the visible price action gives everyone an excuse to look away. This is the scenario where complacency becomes the biggest risk. The structural math does not care if the internet is bored. Vietnam Section 6. Your watch list. Free, public, right now. I sell nothing, no memberships, no Discord, no paid alerts. If you see my name on any paid service, that is not me. You find me here and on X, where the data breaks when it happens. Here is exactly what you watch in the next 4 hours and through Monday morning. COMEX electronic session opens 6 p.m. Eastern tonight. Watch the first 30 minutes. Does silver gap up from 85.29 or open flat? The size and direction of that initial move is the arbitrage traders reading Shanghai's homework and deciding whether to agree. A gap above $87 in the first 30 minutes with volume tells you the physical demand signal from Shanghai was real. A flat open tells you either no signal came from Shanghai or CME announced a margin hike before the open. CME Group margin announcement page. Public, free. Check it at 5 p.m. Eastern tonight before the electronic session opens. Every prior margin hike this cycle came on a Sunday. If you see a 7th margin hike announcement before 6 p.m. Eastern, the exchange has decided to protect the shorts again. Its absence is a data point. CME is letting the market open unconstrained tonight. Hyperliquid silver perpetuals. app.hyperliquid.xyz. Search silver USDC. Live price right now, 24 hours a day. This is the always-on market that priced silver more accurately than Binance during the February 28th Iran strike weekend. Compare the hyperliquid price right now to Friday's 85.29 COMEX close. The gap between those two numbers is what the market that never sleeps thinks silver is worth after 48 hours of Iran war news with no COMEX trading. CME daily delivery reports, published every afternoon at approximately 4:30 p.m. Eastern on business days. Starting Monday, watch which banks are issuing and stopping delivery notices. JP Morgan stopped 375,000 ounces on March 5th. Bank of America stopped 1.275 million ounces on March 5th. Cumulative March deliveries through March 5th, 6466 contracts representing 32.33 million ounces. JP Morgan watch whether that pace accelerates or slows in the second week of the delivery period. Registered inventory level, updated daily on CME's website. Circle 80 million ounces in your mind. If registered drops through 80 million within the next week at the current 785,000 ounce daily drain rate, the coverage ratio drops to 18.6% of open interest. Watch whether we hold above that level or slice through it. Section 7. The honest conclusion. Here is the full picture as of Sunday, March 8th, 2026, 4 hours before Asia opens. COMEX silver 85.29s. Paper claims 429 million ounces. Registered vault 86 million ounces. Coverage ratio 0.20. Daily drain 785,000 ounces. Trading days to March 27th, 19. COMEX has delivered 86.4% of its current registered inventory in just 60 days while maintaining sufficient inventory to cover demand. This represents the highest 2-month delivery rate in exchange history. JP Morgan. The option structure that pinned Friday's 85.29 close expired with the weekend. It is gone. The physical stress that built underneath it carried forward. It did not expire. Mine supply is constrained by declining ore grades, by product status, and long development cycles. High prices of 2026 will not translate into new output until at least 2033 to 2036. In the 7 to 10 years before that, the supply curve is essentially locked. Exchange rates UK. That is the math backdrop for tonight's open. A vault that has been draining for 2 months at the highest rate in exchange history. A paper leverage ratio of approximately 5 to 1. A last trading day 19 days away. And a gamma pin that just expired, leaving price discovery unconstrained for the first time since last Sunday. Whether tonight's Asia Open produces the gap up, the grind, or the head fake, that is what the data will tell you, not me, the data. Your job is not to predict the exact candle. Your job is to pull the hyperliquid price right now, check the CME margin page at 5 RPM, watch the electronic session open at 6 RPM, and let the actual numbers tell you which scenario is playing out in real time. The math is documented. The deadline is 19 days away, and the market that determines what happens next opens in 4 hours. Invest with logic, not hype. Protect your capital. The pin is gone. Price discovery starts tonight. Drop Final 4 in the comments if you are watching the COMEX electronic session open tonight, and drop gap up, grind, or head fake to tell me which scenario you think plays out from where you are sitting right now.